Welcome back to the fourth quarter, the number one show for everything behind the business of sports and entertainment. Siraj, how you feeling this morning, man?
I'm feeling great. This week was a fantastic one. Started off with a banger on Monday.
We got a surprise ticket invite to MSG for the Hawks-Knicks game. We were the only two Hawks fans in the entire stadium. It was electric, and we ended up winning by a point.
Yeah, honestly, I might have to get a CJ McCollum jersey. I mean, he was unbelievable. The new villain of New York City, even though he's married to a dentist, has 2 kids, very much doesn't fit the villain role. But I guess the Knicks fans are making him out to be.
Yeah, he torched the arena. 30 points.
Yeah, 30, 32 points. Those 2 free throws were a little bit worrisome, but hey, we still got the dub. So
now they're playing in Atlanta today.
Yeah, Atlanta today.
So we have to defend 2 home games.
2 home games, yeah.
Bring it back to New York.
I think we got to win these 2. Like, if we can go up 3-1, Game 5 at MSG, I think if we can get that done.
I had a semi-viral tweet that the Hawks beat not only the Knicks that night, but the refs as well. And it got the most likes I've ever gotten. So I think a lot of other people felt that way as well, which is really cool.
Oh, yeah. No, honestly, I feel like the refs were calling some soft calls.
Yeah.
Soft calls.
So there was a tweet that came out saying that there were 2 referee
mistakes right
at the end of the game, but that went against the Hawks. So they missed 2 foul calls, and that's what kept the Knicks close, I guess. It shouldn't have come down to the last shot.
They were cooking though. Third quarter, Cat was just getting every rebound. They had it under control. Fourth quarter, we just figured it out.
Yeah, I was a little scared. We didn't wear any Hawks, or we weren't merchandise, or we weren't wearing any red, because I thought we would get reprimanded by the Knicks fans. But even though we were cheering, we were the only 2 people cheering. It was so quiet when they would make the Hawks would score that you would only hear us in the entire stadium.
Yeah, I know, it's crazy. But overall, amazing experience. It was actually my first time really experiencing the Madison Square Garden Knicks experience, and it was amazing.
Yeah, I don't think there's a better arena.
Yeah, or a louder arena. That was a loud
and it was arena. So packed. There was something mystical about it. Obviously, a bunch of actors and stuff in New York that were sitting in front row, but enough about the actual game. There's enough sports business to talk about this week. Our headline story, the GOAT of F1, Lewis Hamilton, just became a co-founder in a trading card and collectibles retail store concept called Card Culture. Super interesting. Nike stock is down 28% year to date, and there were a flurry of viral tweets that basically said that Nike's basketball shoe sales were down because experts think that players aren't as popular as they used to be. And we think, which we'll get into, that Nike should be venturing into creating shoes with content creators.
Yeah, I think that's the next logical step.
Surprised that they haven't done that yet, but we'll get into that. In league and team news, the MLB's San Diego Padres just hit a record for the highest sale price on a franchise. They sold for $3.9 billion this past week.
Yeah, shout out to the Padres. Massive sale. A lot of people didn't expect it to be such a high of a price. Especially for a local market. San Diego doesn't have any other major sports team. They lost the Chargers.
They just recently got San Diego FC for the MLS.
Yeah, that's true.
But we'll get into it. I was doing a bunch of research behind this, and I was like, oh, wow, there's a lot of
value here. Yeah.
Value, right? A lot of interesting stuff around San Diego, so shout out San Diego. In the world of sports real estate, a new segment that I want to talk about and bring this back recurringly, because every week, there's more and more sports real estate deals that keep coming up. The MLB's Kansas City Royals just launched or announced a new ballpark stadium development for $1.9 billion. Auburn University is moving forward with a $323 million real estate addition project to Jordan-Hare Stadium, their football stadium. And JLL, the mega giant, who you have a bunch of friends at real estate.
Yeah. Shout out to Jake. That's my dog. He former NFL athlete. Now he's crushing at JLL. Super tapped in the sports real estate space. JLL makes so many moves. This one's interesting though because it's not really related to any sports team.
Yeah. So JLL is helping finance a $3 billion development for a Detroit-based sports village, not a team-based real estate development. It's more so for a youth complex kind of leisure development, multi-use development, which is really interesting as well.
Yeah, we'll get more into that because I actually wrote an article, but I think a couple weeks ago on this. So
yeah.
I think sports tourism, especially around the youth sports market, is a really interesting concept.
You know who I'm awarding the king of emerging leagues? Actually, the proper word for that is probably the queen of emerging leagues, the PWHL, Professional Women's Hockey League. They just hit 1 million fans in a single regular season for the first time in its history. We're going to cover that. They've been on a rocket ship, and we'll talk about their growth. Buyer interest is heating up for the team, which was formerly known as the legendary sports agency Wasserman, and bidders are getting ready to make offers, and a bunch of sharks are swimming around trying to either take the whole thing or buy pieces of it. So we'll touch on that. Nobody else is covering that stuff. And of course, another new fund alert, a new fund announcement. Sideline Group raises $155 million on the thesis of investing in the offline economy. So everyone's investing in AI right now, tech. They want to make bets on the IRL world and the human connection aspect and
the anti-AI bet.
That's what I bet. Yeah. We've been talking about this for a while.
It's a great hedge. I think it's a really interesting opportunity. I have some ideas on like certain markets that Sideline should look into, but I mean, so far their portfolio, I mean, it's quite nice.
Our best article, I think personally, was one that you spearheaded. We wrote almost a year ago. And it was basically saying that the next wave of consumer health and wellness startups are going to become the billion-dollar companies that we invest in next.
And it's the ones that are building the communities. It's not just the one that are building the products, right?
Exactly. So we've been on this thesis for a while, but we'll get into that. Stack docket. We'll jump in straight away. The cultural zeitgeist. We are in the cultural zeitgeist. We're always in the culture. We're always in the cultural zeitgeist.
No, we're always in the cultural zeitgeist because sports controls the cultural zeitgeist.
I agree. And I feel like nobody is talking about this stuff, and let alone sports business, that it's shocking that we're one of the few voices that are doing this in not only a written format through our newsletter, but also through this new show now, which is obviously visual and audio. But we have to talk about this. 7-time F1 world champ Lewis Hamilton has just joined the leading trading card retailer, Dave & Adams, to launch Card Culture by Lewis Hamilton. So it's a joint venture where Hamilton will be using his name to launch in locations outside of the North American market, and the first one being in Frankfurt, Germany in 2026. And then they're going to target Australia, UK, and cities in the Middle East and Asia over the next 5 years. And Hamilton basically is a huge trading card collector himself and collectibles geek. And he saw that there was a huge gap in the market, that a bunch of this has been centralized in North America, but there wasn't a big real estate footprint outside on a global scale. And he said that there were thousands of stores in the US, but there was only a fraction worldwide. And he wanted to be a part of the catalyst taking over. And kind of the closest comparison that you can draw to is recently, right, an announcement came out that NFL legend Tom Brady bought 50% of a Boston-based card retailer called Card Vault, and then they changed the name to Card Vault by Tom Brady. And obviously, Michael Rubin has been, involved in that. Michael Rubin was supposedly involved in bringing Lewis Hamilton to Dave & Adams, so part of this new venture. It's not exactly clear. Nothing was public about Michael Rubin or Fanatics being investors, but it's cool that Michael Rubin's still kind of pulling the strings behind the scenes, helping facilitate and giving business opportunities to some of the best athletes in the world.
Right. I mean, when you have a platform with Fanatics that's very much like it's really spearheading I would say like the new wave of, collectibles, like right post-pandemic, he was able to make moves, acquiring Topps, and then now with Fanatics Lives, and at the same time, like their collectibles business overall is just on a growth trajectory like none other in the sports space. So I think it makes sense for him to, use his connections and network and get a lot of these athletes that have this international presence, right? Especially with Lewis Hamilton being like one of the GOATs of F1, Tom Brady, the GOAT of American football, to take another step into the collectible space. I think that a retail footprint is honestly just continued marketing for the collectible space overall. And I think that always has a benefit that trickles back to the most megalodon e-commerce shop there is, which is Fanatics and their collectibles market, or their collectibles segment. So I think it makes complete sense there. What I'm really interested in is how Lewis Hamilton sees the international market differently from the US market. I think that it's extremely fragmented. I was looking into this, right? Like each retail or each region has their own kind of retail dominating spot, maybe like a family shop that like has existed for a while, selling specific cards. Each also region has their own interest in regards to IP, right? Like Japan, it's obviously going to be like Pokemon. At the same time, they're a lot more into baseball, so MLB might have greater presence there. Europe, it might be, much more soccer dominated. At the same time, a lot more presence with F1. So I'm curious what his strategy is in regards to what IP sits in Australia versus Europe versus Asia, and at the same time, how they're going to roll that out.
I actually also think that Lewis Hamilton was the perfect international face and athlete to make this move. So probably the only other athlete that has like global scale like that would probably be behind this trading card, this be the face of this, another good face behind this trading card venture is maybe Cristiano Ronaldo, maybe Neymar, maybe some of these soccer stars, but like, I don't know if they're big trading card, fans and collectibles and geeks, but supposedly Hamilton is a big Pokemon guy. He collects Pokemon. He has 500 valuable Pokemon cards. Supposedly, he has like a Neo Destiny box that hasn't been opened from 2002. We've talked about like the unsealed or the sealed wax, right? Like how.
Yeah. So Sid has this like investment thesis, or like essentially, we should just build out a fund where maybe you raise a couple $1,000,000 and you just buy sealed packs, like sealed Pokemon packs, and just never open them.
Yeah, and I think as this new wave of collectibles and card ripping is happening, people are ripping cards open from 20, 30 years ago, hundreds of thousands worth of packs and cards to try to hit these holy grails. That supply is diminishing, right? It's kind of like a store of value. It's almost like gold in a sense. It's a nice analogy that like if you sit on sealed wax or on unopened cards and boxes from way back when, you could be marked up pretty heavily, I think. So I'm a big fan of this. I think I've been, how I feel about trading cards and how bullish I am on the market. I think this is super interesting. The fact that Michael Rubin also introduced Lewis Hamilton to Adam Martin, I believe is the name, the CEO and owner of David & Adams, I think is cool.
So one thing that I do want to point out about this is that the sports trading card market is worth $15 billion, expected to hit $52 billion by 2034. Obviously, there's major market tailwinds in regards to consumer interest in collectibles. They also see it as a real asset where they can store value in. So there's a lot of different benefits there. At the same time, it's continually getting gamified. I mean, these are all different market tailwinds. Do you think that an athlete spearheading the charge actually really moves the needle, like in a sense where could like Card Vault without Tom Brady, right? Or David Adams still be as successful without having to partner with an athlete?
It's tough to say, but I think one thing for sure is when you have attached a legendary athlete's IP to the operation itself, I think it expedites a bunch of the growth opportunities and kind of just, I think Card Vault by Tom Brady was a Boston-based chain, and since Tom Brady has been a part of it, they've expanded to 14 locations.
Yeah, they opened in SF, right? And it lined up perfectly with the Super Bowl right?
Shout out to our friend Drew Cousin, who's actually, his company Cheers Cash is the official loyalty partner, I believe, of Card Vault. So, I mean, they're making moves, right? Like, I 100% think that, like, there are some business ventures that it doesn't really make sense to, like, why would you put an athlete's face on it or have them be a part of the name? But this one it makes a bunch of sense. I also think that if I'm Michael Rubin and Fanatics, I'm thinking strategically. This is kind of a question for you, right? Even if you're not actively investing into this, do you like kind of incubate these ventures with athletes in your network? So, Lewis Hamilton actually has a completely separate, multi-exclusive collectibles deal with Fanatics that they signed last year, right? So these are all people within Fanatics' ecosphere. Do you incubate these kind of trading card concepts? You have Tom Brady domestically. You now have Lewis Hamilton internationally. Can you be the go-to Fanatics retailer, right? You have this mass scale that you end up getting through physical locations.
Get the Topps cards in those retail stores as well.
Exactly.
I think this is really smart because you also don't get as much risk in regards to building out the retail stores. But at the same time, you're like, hey, look, we can actually supply you inventory. We just need someone who can push on the real estate front, right? Build out these actual physical stores, because there is a genuine experience that's like none other. I mean, I'm not like a major collector myself, but talking to people who are collectors, like a lot of the ones that are like actually interested in the card itself and like find the beauty in it. It's not just like speculation where they're trying to make money off of it.
Yeah.
They love shopping in person. Like that's something that they want to do. So it's like continually build out that footprint internationally, and then now you can put more Topps cards in Japan, in Australia, in Europe, right? Where there's, a lot of different players, right? Like Panini's really big in the Europe market, right? At the same time, Topps, for example, just got the IP for the Champions League. I think that if they have more presence in retail stores, a lot of people might be buying more of the Topps cards as well now. And I think a lot of that could be through athlete distribution like Lewis Hamilton and then Tom Brady domestically.
I think it's a really interesting move. We'll see if Fanatics actually verticalizes it. They'll be the official, obviously, retail partner providing the inventory themselves, the product. But we'll see if this is an interesting, super long bet of verticalizing and then getting into the real estate plays without being on day one building out the real estate. So you think this is a cop or a flop?
I think this is a cop. I think this is a huge win. I mean, one, you've already seen Tom Brady be successful with it. I think Lewis Hamilton's the perfect international player for this.
Yep.
And then at the same time, you got Michael Rubin backing you. You have a lot of firepower to work with.
Agreed. Producer Pob, you're going to have to pull this up, but there was a tweet that went viral this past week from the NBA base and Brian Windhorst at ESPN. And they basically said that Nike is reportedly struggling to sell basketball shoes because NBA players aren't as popular as they used to be. And financial experts claim the lack of player popularity is now directly hitting Nike's revenue and stock price. Two interesting retweets that came out of this when I was doing my research and diligence for this. So Rich Paul and Max Kellerman talk about this on their Game Over podcast and discuss this and basically say that every company now has like a signature guy. They have multiple signature guys, and that not many kids want those signature shoes, right? What got them excited as kids when they were like trying to get these Jordans growing up and being inspired by Michael Jordan playing, they're saying that the kids don't feel that same way. And that's the first tweet. And then the second is from Chris London, like a mega basketball influencer. And he said, and he has over 5 million followers, by the way. This guy is legit. I remember watching his videos growing up. Very Dude Perfect like. Jesser, if you know Jesser,
yeah.
They've collabed a bunch. But he said, no, players are more popular than ever. Nike just ain't adapting fast enough and are also cheap while still selling kicks very high. You wonder why new athletes with motion are starting to sign elsewhere. So before I pass it off to you, just want to give context. I use Perplexity Finance. Have you used Perplexity Finance?
I haven't actually yet.
Okay, this is amazing. So it's a new thing by Perplexity, and it basically ingests the latest stock prices and public information, so you can kind of query it and ask it stuff.
Okay.
So I used it and basically saw that Nike stock is down 28% year to date as of this morning. It's trading around $45.68. And yeah, so I mean, it's down. I've tried to
find
quite
significantly. 30% is quite a lot.
If this graph,
4
Producer
months.
Pablo, you're gonna have to pull this up, but this is pretty red, right? But it's mostly attributed to higher tariffs, which have eaten into gross margin. It's not necessarily talking. I've tried to look through their 10Ks and their financial docs saying if there's anything related to basketball and basketball shoes. There has been a decline.
Yeah, they've had like significant inventory with like Air Force Ones and Dunks, and like that was a big issue that they were dealing with. At the same time, they made that pivot from wholesale to direct to consumer, and that was a little bit botched. The way that they were thinking about it didn't actually pan out to what they needed. And at the same time, when you lose wholesale footprint, you're giving that up to competitors, right? And let's be real, everyone likes to buy their shoes in person. So there's a lot of this, but I think that there's, and I want to get to these two tweets.
Yeah.
The two tweets really encompasses this struggle that Nike's dealing with in regards to, Pop, you're going to have to use this sound, but really being the cultural zeitgeist of like the shoe industry and footwear, right? Like Nike used to be kind of just like a lifestyle product. Even the basketball shoes, right? Like people would just wear KDs just to wear KDs, not even if it's even if they're hooping, right? At the same time, I think like basketball shoes overall, I think there's just a lot of players now that are just like building their own influence. Mm-hmm. And at the same time, what they're realizing is like, hey, look, I've built out this influence. I built out this influence already, right? Like I can make a lot of money through royalties from Nike, but now a lot of athletes see themselves as almost like CEOs, right? And we see this because athletes are continually building their own businesses and they're building their own brand through it. For example, Jaylen Brown turned down, I think, like a $10+ million contract with Nike to build down his own shoe brand called 741s, right? Now, I'm not entirely sure how well that shoe is doing, but what it tells me is that, nowadays these basketball players are making so much money on the court through these contracts, and at the same time sponsorships outside of shoes. They want to take these personal bets on the shoe market as well. I know this isn't basketball related, but Christian McCaffrey has his own brand as well. Yep. While on Earth, he ended up leaving Nike and now is building his own lifestyle performance apparel brand that includes shoes too. So I think that there's a lot of these different moves. You saw Kyrie, he wanted more of a leadership role, so he left Nike, went to Anta, and he's the chief creative officer for Anta basketball, right? And Anta's actually doing really well and is eating up the Chinese market. So when Nike was actually a really much a power player there. So I think that there's both sides to this. I also think that a lot of these other shoe brands are willing to take bigger swings with athletes, and I know you have some thoughts on that.
Yeah, so I'm surprised that these shoe companies like Nike, after seeing that their sales have been falling, why they haven't taken bets on influencers and doing shoe collabs with influencers. So I see that we're like Dude Perfect has 100 million followers. Jester has 40 million subscribers on YouTube, big basketball creator. MK, the viral one-on-one street baller, has 7 million followers. Kick Genius, I don't know if you know them. I don't think they make it as much videos, but producer Pablo, you're going to have to pull up this video or pull up this picture I took with Trey Good. He was like one of the influencers at the 2015 or 2016 SneakerCon in Atlanta, right? I met him. Him and his partner used to test basketball shoes. And I think now kids are consuming basketball content through socials and digital first. I would argue that these influencers are probably more influential to these kids and purchasing behaviors than the basketball players themselves that are playing on the biggest stage in the NBA. So you have Mr. Beast, who obviously did Feastables, right? And now you create a snack brand. You have all these influencers creating CPG products. Why don't you get one of these mega influencers within the basketball space and create a collab shoe with them? They have this built-in distribution. They have undying loyalty, right? I just think it makes sense, at least to test it out, make it exclusive.
Yeah, I think it's really shoe culture honestly stems from the youngest generation, right?
100%.
That's like it's just getting into sports, and they're not consuming they're not consuming sports much on streaming and broadcasts like when we were like kids, where we would sit around the TV with our family to watch, the Atlanta Hawks, right? I think now it's kind of different, and so they're consuming a lot more sports on socials, and that's where the influencers are great distribution there. I think a partnership would totally work. I think it also like light a fire underneath the brand. There's one, Jesser, Dude Perfect, very much sports related. I think even Speed would be like a sick 100%. Collaboration there, because he spans all different sports. You think for
like a soccer cleat, or like more of like a regular shoe?
Even just a regular shoe.
A lifestyle shoe?
Like a lifestyle, but it's still like tied to a sports apparel brand. I think that'd be great. I mean, he was on WWE, Fanatics Flag Football. That's true. Is probably going to be very much involved with, World Cup promotion as well. I think that would be such a money move for a shoe company. It would be expensive, though. I think it'd be very expensive to work with Speed, but I think that's kind of an interesting partnership that maybe a Nike could do.
If you're a footwear executive at one of these larger companies, this is your sign and signal from the universe that you should maybe start looking into creator partnerships. I think we've been pretty accurate on predictions on the fourth quarter. I'm waiting,
especially related to the creator economy, because we just 100%. See so many more tailwinds, but we have not really seen an apparel collaboration with creators. There's a reason why creators all have their own brands or apparel brands, because they don't really get those opportunities.
There was a company called Hey Dude. It's a shoe company. It's kind of like I don't know. I've never wear them, but they're pretty popular. Dude Perfect did a collab with them, but none of the numbers were public about that. But enough about that. We have to talk about team and league news. The largest MLB sale price ever just happened this past week. San Diego Padres sell for $3.9 billion, the highest ever paid for an MLB team. So topped the previous high when Stephen Cohen bought the New York Mets in 2020 for $2.4 billion. So the people that bought the Padres were the Clear Lake Capital co-founder and managing partner Jose Feliciano and his wife Kwanzaa Jones. They also own Chelsea FC
with Todd Bowley.
You did this analysis. It was an 8 times revenue multiple. I think they had like $425 million or something like that in revenue. Yeah, $450 million in revenue last year, which was the 11th highest in MLB. And which I thought was super interesting is that the sales price rose from $2.5 billion to nearly $4 billion during the bidding process.
Yeah, bankers were seeing that there was actually a lot of demand for the Padres. And I think this is something that we talked about before. It's like there's a difference between some of these big markets and local markets. I would consider San Diego like a pretty local market, maybe like a tier 2, tier 3 city.
Why would you consider it like a tier 2, tier 3 local market?
Right. So there's a few reasons. One, they were actually dealing with an issue with local media rights where they're not getting as much revenue from like an RSN compared to some of the other like big cities, and that's a real tell on like whether you're a tier 2, tier 3 city.
Can you break that down for me?
So for example, like a lot like LA, like Los Angeles, New York, they have a really powerful regional sports network, right?
Okay.
So they actually make a lot of money from like local television, local cable broadcasting their games. San Diego.
So like channels outside of like the national
broadcast, right? Okay. Exactly. Because they allocate games for like local TV.
Who would a national broadcaster be? Like an ESPN?
Yeah, like an ESPN, your NBC, right? TNT. TNT is a big partner with MLB.
So hypothetically, like a San Diego like sports network.
Yeah.
Is what would got it.
Right. Exactly. Like for example, in Atlanta for the Hawks, like it's Dominique Wilkins who's very much involved with like the local broadcast of the Hawks games. So they actually don't get that much revenue from there. It's actually like quite significantly lower. I heard that there was a botched deal there of some sort, but that's also a telltale sign that they're not as high of a tier as like a tier 1 city, right? At the same time, San Diego lost their NFL team. They haven't really had a basketball team really ever.
So the LA Chargers San Diego Chargers moved to LA Chargers in 2017, I believe.
Yeah. So pretty recently, but like, I mean, you really only have one major sports team.
They have San Diego's MLS.
But out of the big 4 though, they really only have the Padres.
That's true.
And so now you could say like, okay, there might just not be that big of a sports culture there anymore, which is actually false. When the Chargers left, it actually created more demand to go to the Padres games. And so if you actually look at it, I think they're like 11th in revenue out of like the entire MLB. Also, San Diego is actually a pretty good spot given that it has a very high average income. I believe it's like $100,000 to $110,000.
Yeah, and just to touch on the 11th highest in revenue. So they actually had the 11th highest in revenue, and they had the second highest in-person attendance. All of the MLB. Only behind the LA Dodgers. So they had 3.4 million.
Right. For a local market, getting number 2 is
ridiculous.
Actually great.
So 3.4 million fans last season, finishing only second behind the Dodgers. 72 sellout games, and they averaged over 41,000 fans.
So it seems like the Chargers leaving was actually kind of good for the Padres.
I think so too. If I'm a San Diego resident, I'm interested in sports. You now only have one marquee team to go support. Yeah. So I think it makes a bunch of sense. But also, like, to your point, the median household income of San Diego County, excuse me, is $106K, and 45% of adults have a bachelor's degree or higher. So it just proves that this isn't a fragile market. This is, affluent,
big spenders,
educated, big spenders. So super interesting. But also, it makes sense for why this team is pretty hot, even though it's not like the number 1 revenue generating team. You also have a modern ballpark. It's a newer Petco Park, I believe is the name. It's a modern park. They just had renovations done the last couple of years, so it's pretty modern downtown. They also have superstars, Fernando Tatis Jr., Manny Machado, right? You have people and tentpole IP that people can support. And yeah, I just think it's a good move. I mean, Jose Feliciano and his wife also already own sports assets with Chelsea. I think this is a nice asset in addition to their portfolio.
Yeah, 100%. And I also think that it's great for the MLB because it traded 8x revenue, right? I think that's above the median, which I believe is around like 6 to 7. I think it's on the low 7s. So for a local market to get that type of deal, I think that a lot of other sports team or a lot of MLB teams might actually feel encouraged on a sales process. If you actually look, the last like open sales process that happened that actually didn't end up falling through because they couldn't reach the right price was the Minnesota Twins, right? And so now the Minnesota Twins might feel, okay, look, there was actually a lot of engagement for the Padres. How can we make our local market similar to them? What are we missing in order to get that type of deal, right? So I think it's a good blueprint for, local markets, and at the same time, good for the MLB overall because franchise valuations are so much higher.
Yeah, and just to top this off, I used our favorite AI tool, Index, to do a quick analysis. So Index is a AI financial modeling tool backed by OpenAI. And we did a partnership with them because we used them for an analysis of the Knicks and Rangers spinning off from MSG a few weeks ago.
There's actually so much intersection between sports and finance. And so using a financial tool that's powered by AI is something that I've been looking for. And I've actually been close with the Index team for, even prior to really building out the fourth quarter full time. And
you almost worked there.
Yeah, I almost worked there actually. When I was doing banking, that I was having talks with Index on, is there any way that I can get involved with the team? Because I was thinking about leaving banking. And so I was like, hey, look, like we're building out the fourth quarter. Like, is there any way we can partner up instead? So I'm excited for that. But tell me a little bit more about your Index analysis.
Yeah, so producer Pablo, you're going to have to pull this up. But I basically did two things. So I used Index. Index is an integration within Excel, Microsoft Excel. So I basically told it to pull the valuations of all the MLB teams for 2025 from Forbes. And then I told it to pull all of the attendance numbers, which are public on ESPN. So I told them to rank them and do a quick analysis to compare the attendance to valuation, which are the most, which teams are undervalued, overvalued, or fair market. And we saw the most undervalued from ranking in attendance to the valuation was actually the San Diego Padres. So interesting to see that number. And the two other teams, which I think are pretty fascinating, are the Colorado Rockies. So their attendance is ranked 9 teams higher than their valuation. And the Milwaukee Brewers, which their attendance is 8 teams higher than their valuation ranking. So are these two teams that, as private equity folks and new buyers are coming in to look at the MLB, are these two potential assets? Who knows?
You have very sticky viewership at the same time, like very loyal fans that are willing to go to the games. I think that's always a good market to buy into, even if it's a local one.
Obviously, there's so many other factors that go into valuations. This was a pure linear, wanted to isolate 2 different variables and see their comparison, see if there's a correlation. There was clearly a correlation. So obviously there's more that comes into what a team valuation, MLB team valuation actually is. But it was cool nonetheless to use Index pretty quickly late night when I was just doing some analysis and prep for this show. I was like, I'm just literally talking instead of like pulling a bunch of raw numbers and data by hand. But very cool. And we have to talk about our sports real estate news section. Very quickly, we'll list off kind of 4 of the biggest projects that are happening this past week that were announced. I think sports real estate continues to be one of the fastest growing assets and sectors within all of sports. So the MLB's Kansas City Royals new ballpark recently got approved from the city manager to negotiate a term sheet, lease, and development agreement with the Royals for a downtown park. So the cost is about $1.9 billion. $600 million is to be financed from the city. It's public funding. I know that was a point of contention. That's what moved the Kansas City Chiefs.
Yeah, so Kansas City Chiefs couldn't secure the public funding that they wanted from the government, and so they're going to end up leaving Arrowhead and move to Kansas because Kansas is willing to give that public funding to them. I think that you don't want to lose 2 stadiums in a row. So
I think most people don't know this. Kansas City, the Royals and the Chiefs actually play in Missouri.
Yes, because Kansas City is in Missouri. I think you might be the only.
No, I don't think I'm definitely.
Well,
not
it's not that intuitive
you would
to
think
say
that
like Kansas City
is in Kansas,
right?
Okay, but now the Chiefs are actually moving to Kansas, right?
Yeah, so Kansas City or the Chiefs is actually moving to Kansas.
Yes.
Yeah, from like a stadium perspective.
See, that's not like
obviously, but their fan base is like their fan base is spread across Missouri and Kansas, so it's like it's more of a loss for the state than anything else. I think fans might be a little bit upset because you live in Kansas City, you want to have close access to the arena, but I doubt it's that far away from the actual city itself.
All right, geography expert, how far is Missouri from Kansas?
Like Kansas City is literally like on the border.
Okay, so they're right next.
Yeah, they're like basically right next.
Are you sure about that?
I'm like 95% sure.
Okay, all right, producer Pablo, we're gonna have to double check those facts right there. It's a 85 acre mixed use development, by the way, in Crown Center, which is in the center of Kansas City, and they're targeting a 2030 ballpark opening day, by the way. So pretty cool. Excited to see that. The renditions have been awesome, so we'll have to put up another picture of that. You saw that as well. It looks fantastic. Honestly, for someone who hasn't been to the Midwest, I don't know. I would have never guessed. If I looked at that picture, I would have never guessed that was Kansas City. So awesome to see that. Auburn University moving forward with the $323 million additions real estate project to Jordan-Hare Stadium. It's the largest capital project in program history. $305 million facility, and they're doing a $19 million or $18 million for a plaza. It's set to be done in spring 2029. It's a multi-purpose center with 7 stories, 3K additional premium seating, and expanding campus dining options. Isn't that really cool?
Yeah, I mean, I think it's time for college sport. I mean, college sports is going to make that next big leap in the real estate space. We're seeing mixed-use real estate developments happening all the time for pro teams. When is it going to happen for college sports? I think that there's actually a lot of demand for that. It's also necessary for them to build new revenue streams, especially given that their cost structure is getting much more difficult to deal with, given that they have to pay players, pay players significant amount of money. And so at the same time, you have to bring in new ways of making a dollar. And I think real estate is by far the best move for them. I think it's the easiest thing to do. You're going to see a lot of stadium renovations where they're building in suites. At the same time, expansion moves like what Auburn did.
Did you know the last project that they did at Auburn was a $25.7 million video board in the same stadium, same end of the stadium before the 2025 season?
Yeah, look at that scale up right there.
That's crazy. Wonder where they got that capital. Anyway,
donors are definitely willing to give money to like make sure their experience is great whenever they come to the game. So.
Yeah, I agree. And then JLL, the mega real estate giant and real estate development firm, has been hired by Motown Sports Group Holdings as the exclusive financial intermediary for Motown Sports Village in Ramos, Michigan, next to Detroit Airport. So JLL's job is, it's not like a sports team real estate development. This one's a sports village, like we said at the top. So it's multi-use, mostly for youth sports. You'll have lounge, leisure, sporting, entertainment, hospitality, a mix of a bunch of different stuff. So JLL's first job is to actually line up the capital stack. So the first step is that they're trying to raise about 40 to 50 million for pre-development and land financing. So I don't know. When people think about $3 billion, they're like, oh, they're starting ground, or most people, at least I thought that, development starts, boom, you have $3 billion and just construction of all these things gradually over time, but it's segments, right?
Right. Because at the same time, you just don't even know if you really need $3 billion for the project. Maybe you even need more, right? So ramping up in regards to the development process. And so I think at some point in time, it actually could be a $3 billion development based on what they want to include. You have a good rundown of what they're building there, right?
Yeah. So it's a 452 acre sports, entertainment, hospitality destination, 1.15 million square foot youth sports complex. They have 9 to 11K seats, so a seating arena. They're going to have a 450,000 square foot indoor water park and surf park, 96T golf center. This is ridiculous. So it's essentially a sports tourism real estate play built around tournaments, family travel, hotel nights, food and beverage spend. JLL also said in this press release that they cited $47.1 billion in direct spending towards youth sports tourism as the main driver, and that about $40 billion of family spend tied to youth sports. Isn't that ridiculous?
Yeah, I mean, look at just travel baseball, for example. Unrivaled Sports has a big bet with Ripken, right, where they're building this full experience. They're building at hotel restaurants for the families because they're traveling with their kid who's, either they're on a travel baseball team or they're playing at that tournament, right? A lot of families actually have a lot of spending power. One, if they're involved in a travel baseball team, and at the same time, it's almost seen as a vacation itself for them too, right? So with that, why not just build out really cool entertainment experiences for the family itself. I also think that when you build out, youth sports is just going to be a huge thing, just like overall, right? I think more and more kids are getting involved in sports every single day. And I think a lot of it has to do with the expansion in infrastructure. And so if that's the case and it's tied to tourism, then some of these mega projects might actually be successful.
I agree. Moving on to emerging league news. Like we said at the top, they're crowned the queen of emerging league news
for this week,
because there's always
an emerging league that pops off week to week, and we want to highlight
we need to start a segment, start bench sit or start bench cut emerging league, because there's always emerging league news. But anyway, this one clearly is the start for this week. Give me the Professional Women's Hockey League, PWHL.
Why?
Okay, so launched in 2023, and the league just crossed 1 million fans in a singular regular season for the first time in its history. It got there in its 109th game of the season, 46 games faster than it took to reach that mark before. Quickly, through 112 games, the league has over 1 million total fans and averaging a little over 9,000 fans per game, which is a 28% increase year over year and roughly 62% above the inaugural season, which is insane. They sold out MSG and TD Garden, so they drove 18,000 fans at MSG, and then, which is a new U.S. attendance record for women's hockey, by the way, and then 17,850, so nearly the same amount at TD Garden in Boston 1 week later. Ridiculous. They have an interesting growth strategy. They're called takeover tours.
Right? Yeah.
Tell me about this.
So, those stats are pretty phenomenal. I do want to point out, obviously, with the Olympics and, the U.S. women's hockey team beating Canada.
Both big drivers, right? Tailwinds for this.
Major tailwinds, obviously, because you're bringing more attention to the sport. Obviously, it was an amazing experience for, most people who live in the U.S. that were tuning into the Olympics to see that win and also see how entertaining and exciting hockey is. I think that's actually slept on. A lot of people just haven't been exposed to watching hockey before, right? Like they're just used to like a traditional sport that's just like basketball, soccer, and then football in the U.S. I think that a lot of people like I talked to my friends and like, I never really tapped into hockey, and I went to a Rangers game and I was like, holy cow, like now I can't stop watching hockey.
Wait, I heard out of all the sporting events and teams in New York, the Rangers are the best to watch
experience,
IRL.
Right? Yeah, exactly.
That's what I heard. I've never been.
And so I think that Olympics is definitely a tailwind, but they have a really interesting strategy. It's called the takeover tours, and it's essentially due diligencing new markets, but through a form of marketing, right? So let me explain. PWHL, they only have 6 teams, right? So they're only in 6 cities, but they're constantly looking at what new cities that they can build new franchises in, right? And so in 2025, they tested out with Seattle, or they named Seattle and Vancouver as the first 2 expansion franchises. But before they did that, they did 2 takeover tours in Vancouver and Seattle to test out the market.
That's
and
cool.
There was massive attendance. I think Vancouver sold out over 19,000 seats, which was, insane for obviously they were able to sell, Madison Square Garden. They're selling out with 19,000 fans. It's pretty crazy.
Canada's bigger there.
It's a bigger market there. But still, Seattle also was dealing. Seattle also had a ton of fans as well. I think 10,000 plus. So what they were seeing is okay, there's actual demand in these markets. So now we want to expand there. With the 2025-2026 slate, they're adding 7 new markets: Calgary, Chicago, Dallas, Halifax, Hamilton, Washington D.C., and Winnipeg. With returning ones as Denver, Detroit, Edmonton, Quebec City. So they're still testing out all these markets. They have these takeover tours. They see, hey, are these fans excited about professional women's hockey? And if there are, that might be the next on the docket for expanding into that city. If not, then continually test it out, right? You can also navigate what makes a market work, what makes a market not work.
Yeah.
And at the same time, what do fans really want? Does the experience have to change? They continually to tweak. And then at some point in time, they're like, okay, this market actually works now. Let's expand there.
Yeah, I agree. Moving on to the industry spotlight segment, a new segment that we want to launch and kind of keep this recurring, see who's in the cultural zeitgeist for this week. We have to say Jack Settleman is in the cultural zeitgeist this week with his angel investment tweet that he made and the success. Shout out to our guys, Jack Settleman, founder and CEO of Snapback Sports. Not only did he have a baby with his wife recently, It's also been a big week for his angel portfolio. He tweeted he had two of his investments had big power ups this past week. Memento, a mobile app that lets fans capture, share, and relive live event experiences, just got acquired by TickPick, one of the leading ticket marketplaces. Congrats, Jack, again for that. Real, his second company that he angel invested in, fast growing social box score app, just raised a funding round led by the Chernin Group. Exact numbers were not disclosed, but Mr. Settleman says the round was monster. Congrats, Jack. Wishing you continued success on your angel portfolio and hope to see more.
Huge couple of weeks. Also, congratulations on the new baby, Rory. Yeah. And Rory McIlroy won the Masters. So Jack Settleman's on a heater. The only thing that he will lose upon is his take that the Knicks will beat the Hawks and that the Knicks will go to the championship.
Yep, agreed. Okay, well, we have to talk about this. It'll be pretty quick because there's not much else to say other than a quick update on this. In the world of M&A and major investments in sports, another fascinating deal process is heating up, and that is the sale of Wasserman, now rebranded as the team. So what makes this super interesting is that you've got private equity, a mix of bidders, private equity, UTA, the other leading talent agency, Patrick Whitesell, who was, I believe,
part of Endeavor. He was like a major part of Endeavor.
Exactly. And even a group tied to Alexis Ohanian, shout out Alexis at 776, all reportedly circling the asset. And this isn't a simple sell either. So bidders have reportedly been told that they can bid on either Casey Wasserman's stake, the whole company, or something in between. And initial bids were due this week. And the field is expected to narrow in the coming weeks. Mullis, the investment bank, is running the process, and reports peg the business at around $3 billion valuation with roughly $200 million in EBITDA. It's not this. What makes this super interesting is that the team is not a random distressed asset. It's actually a strong sports business or sports marketing business, a legendary talent agency, of course, and it has a meaningful music representation business and strategic value to different buyers for different reasons. What do you think? Who do you think makes the most interesting buyer for this? Obviously, Goldman bought Excel last year.
Yeah, private equity loves their talent agencies. For example, we obviously CAA, TPG owned, and then they sold to Artemis Group, which is another private equity firm extended by Francis Pinal and Caring. You have Endeavor, which is owned by Silver Lake. At the same time, UTA, I believe EQT has a major stake in or even owns the asset fully. Gersh, which is their fourth biggest agency, they're owned by basically not, I think it's a minority stake, but it's like a 49%, like something pretty high, 40 to 50%, by Crestview Partners. So naturally, I think it's going to be a private equity firm. I think it'd be cool to see some type of synergistic acquisition where you do have an Alexis Ohanian acquiring a talent agency and see if there's a unique direction that you can go rather than just hey, let's pump up EBITDA. Let's make sure margins are high. Let's continue to grow like a talent agency grows, but instead making really big swings. So that would be a cool, interesting acquisition that I think would be exciting.
Obviously, if we disregard any regulation, I think the three coolest buyers could be Goldman, because Goldman Sachs recently just bought Excel at $1 billion valuation, so strengthening that side of its talent and sports business. UTA can strip parts of, apparently, obviously through this process, now bidders are allowed to bid for various pieces. Can UTA, the other leading talent agency, buy a part of Wasserman or the team, maybe their music, entertainment, music sports department and division? JP Morgan has a big sports presence as well. Could JP Morgan pull a Goldman Sachs and do what they did with Excel to the team?
I doubt it though, because Wasserman
I'm thinking creatively.
Yeah, no, 100%. Wasserman just has or the team. They have exposure also entertainment, right? Music, movies, etc. So I don't think that that's much of a value add. I think what made Excel so interesting is that it's just sports, and I think that's the most synergistic from a wealth management perspective for a Goldman or a JPM, right? Because we were talking about JPM with the athlete council, yeah. Right? They're trying to work more with athletes, so it makes sense to why not just represent them as well.
What if JPM only bids on the
sports? Yeah, what if they spun out the sports or spun out the sports arm of Wasserman?
Yeah.
I mean, it could get really crazy. My guess, I think the private equity firm just buys it.
Yeah.
But because now they're looking less on just software companies, because we're seeing what's going on in the public markets there. Now they're hey, maybe we just might take a swing on a traditional talent agency. Because we know that playbook and we know that it works.
Well, we're going to end with a new fund alert. Sideline Group just raised $155 million for a debut fund built around what it's called the offline economy. And I think the framing is worth paying attention to. So it's a New York-based investment firm started by Greg Maslin, who's a former Tiger Global and Silver Lake investor. And the bet is pretty simple. As the world gets more digital, more algorithmic, and more AI-driven, the real-life value experiences and active lifestyles in physical communities goes up. Their portfolio already includes companies like Bandit Running, Urban Golf Performance, and Mari, which is Ari Emanuel's company that has a very similar thesis, buying up live events businesses, and the same company that's behind the Miami Open and the Madrid Open. So I don't think it's just a consumer fund or a sports fund. I think it's really taking a bet on people will like to stay in the human connection, spend time with other people. I'm a big fan of this thesis. Cool to see another sports fund or a fund that's investing in sports that is not just for the emerging leagues and taking up minority stakes in teams. So super refreshing. I'm bullish on this. But overall, good show today. Pretty quick, bite-sized. I think we provided everything we wanted to. We wanted to experiment with new formats and timings.
Yeah. So we've been going above an hour. We've been hitting an hour 20. We wanted to try out this one where we go an hour.
Maybe better for our retention, right?
Yeah, but I'm pretty bullish on going a little bit longer because I would have talked a little bit about more about the sideline.
Yeah. Well, I know you got to run, and we'll keep experimenting.
Yeah, we gotta close some brand sponsorships. That's the only reason why I got to run.
Yeah, if any of this is interesting to you and you guys want to get involved with the fourth quarter, feel free to reach out for any capacity. Thanks for watching and tuning in. Fourth quarter out.